Okay, let's dive right into it. Something pretty significant just happened in the crypto world.
Mm-hmm.
Bitcoin hit a brand new all-time high yesterday,
That's right. And it's actually trading even higher today, May 22nd.
which, interestingly, marks a surprisingly historic anniversary.
Uh-huh. You're talking about the Pizza Day thing.
Exactly. Back in 2010, on this exact date, someone famously spent 10,000 Bitcoin for 2 pizzas.
Crazy to think about now. What does that history lesson mean today?
Well, looking at the sources you've shared, at Bitcoin's current price,
Yeah.
those 2 pizzas would be worth somewhere around $1.9 billion.
Billion. Wow. It really puts the scale of this market's journey into perspective, doesn't it?
Absolutely. From a pizza purchase to, well, a multi-trillion-dollar asset class in just over a decade.
And that really brings us to why we're here for this deep dive.
Right.
We've got a stack of your sources, articles, updates, market data, all focused on the current landscape of Bitcoin and crypto.
And our mission is to sift through all of it, pull out the most important nuggets of knowledge, the key insights.
And maybe a few surprising facts along the way.
Think of this as your shortcut, really, to getting well-informed about what's happening right now without getting lost in all the noise.
Exactly. The material you shared covers, well, pretty much everything. Those headline-grabbing market movements, interesting regulatory developments happening across different regions like the U.S. and the Middle East.
Plus key industry innovation. It's a lot to track.
It is. But we're going to help you unpack what's driving things and, what it might mean going forward.
So let's start with those numbers that are making headlines. The sources confirm Bitcoin reached that new all-time high yesterday, May 21st.
Yep, hitting a peak around $109,000.
And today, May 22nd, it's trading even higher, currently around $109,580.
The data shows it's up about 1.80% in the last 24 hours.
And a solid 4.84% over the past 7 days.
And based on the trends discussed in the sources, there's some speculation that prices could potentially push towards $110,000.
Or even higher.
Or even $112,000 soon. The momentum seems to be there.
Okay, looking at the broader picture then, the total crypto market cap, according to the sources,
Stands at $3.52 trillion.
wow, it's seen a small increase, 0.84% in the last day.
But a more significant jump, 12.06% over the past week. That's pretty strong.
And one figure that often signals institutional interest is ETF inflows.
Right, and the sources indicate a notable $681.1 million flowed into crypto exchange-traded funds.
And that's just in the last 24 hours.
Just 24 hours, covering Bitcoin, Ethereum, and other crypto ETFs.
And trading volume looks robust, too.
Yeah, sitting at around $172 billion across the total crypto market in the last 24 hours. High volume can certainly fuel these price rallies.
It can, but the sources also add a note of caution here, which I think is really important.
What's that?
Even with prices pumping and high volume, market sentiment often means this is the moment when a lot of professional traders
And high net worth individuals.
exactly might be looking to take profits.
Right. So while the numbers look bullish on the surface, the analysis suggests it's wise to be prepared for potential selling pressure too.
That's a crucial perspective to hold alongside the exciting price action. Definitely.
Okay.
Now, let's shift gears completely and look at what governments and regulators are doing. Your sources highlight some really interesting policy moves.
Starting in the U.S.
Starting in the U.S. with Texas.
Yes. This caught my eye too. According to the material, Texas is set to become the third state to establish what's called a strategic Bitcoin reserve.
A state-level reserve. And the bill, SB 21.
Senate Bill 21, yeah.
Yeah.
It's passed through the legislature and is heading to Governor Greg Abbott's desk.
And the sources seem quite optimistic about its approval, right?
Yes, largely because Governor Abbott is described as a strong advocate for Bitcoin. His support is seen as a key factor.
Makes sense.
So the bill's signing is considered highly probable. And this move, by a major U.S. state to actually hold Bitcoin in reserve, it's seen in the sources as a pretty significant step towards broader governmental acceptance.
Okay, interesting. Let's cross the globe now. Look at Hong Kong. The sources mentioned they've approved stablecoin legislation.
Right. Hong Kong is definitely strengthening its regulatory framework for virtual assets.
How so?
They're establishing a licensing regime specifically for fiat-referenced stablecoins, FRS, they call them.
So coins pegged to currencies like the Hong Kong dollar.
Exactly. Issuers of those will require a license from the monetary authority there.
And what are some of the key requirements for these FRS issuers? Are they strict?
Seems like it. The sources detail several, including strict rules around reserve management, robust controls for redemption risk,
Okay.
and full compliance with AML-CFTC standards.
Right, the anti-money laundering and countering the financing of terrorism rules. Standard but important.
Very important. Now, the source you shared included an interesting nuance here.
Oh, yeah.
It acknowledged some criticism of stablecoins alongside the rationale for regulation.
What was the criticism?
Well, the source brings up the point that stablecoin issuers can function quite similarly to banks.
Which some see as justifying regulation.
Exactly. But immediately, they contrast that by emphasizing the massive market impact stablecoins have.
They are huge for trading volume.
Huge. Accounting for up to 90% of crypto trading volume, the source says. So, while the regulatory lens is understandable, their vital role is undeniable.
So the goal is balance.
Pretty much. The overall goal of this legislation, according to the analysis, is to foster financial innovation while ensuring user protection and market stability.
That balances the picture well. Okay, back in the U.S., let's touch on New York City.
Right. Mayor Eric Adams.
Who's notably running as an independent now after previously being a Democrat.
Yes, and he's been an early and very public supporter of Bitcoin. The sources remind us he was among the first political figure.
To take his paycheck in Bitcoin, I remember that.
Exactly. And now he's initiating the creation of a digital asset crypto council specifically for New York City.
A dedicated council? And who is the city putting in charge of this initiative?
The sources named Matt Frazier as the person appointed to spearhead this council.
Okay.
And the announcement included a quote from Mayor Adams saying, "The age of tokenization is here, and we are going to continue to move forward with it."
That's a pretty clear statement of intent for NYC.
Very forward-looking for a major global city. It really feels like regulators and traditional institutions are finding ways to engage more actively.
It does. Which leads us nicely into what some of the big industry players are building. Robinhood, for instance.
Ah, the trading platform.
They're making a significant move related to real-world assets, according to the sources.
They are indeed. Robinhood has submitted a substantial proposal, 42 pages, to the SEC.
Wow.
This filing, called Reg M, is specifically designed to seek the first-ever federal framework for real-world asset, or RWA, tokenization.
RWA tokenization, so putting things like real estate or stocks onto a blockchain.
Basically, yes, putting ownership of physical or traditional financial assets onto a blockchain.
And this proposal is linked to a new platform they're developing.
Exactly. It supports the planned launch of their Robinhood RWA exchange, which they're calling RV Exchange.
RV Exchange, okay.
The sources describe this platform as aiming to integrate compliance, social investing features, and blockchain innovation.
So, quite ambitious.
Very. The proposal includes standards for federally licensed issuance of tokenized assets and tools for compliance, like chain analysis.
And where are they planning to build this RV exchange? Which blockchain?
The material indicates it's planned for the Solana and Base blockchains.
Okay. And they have big goals for it.
Huge targets, aiming for $10 billion in total value locked TVL.
That's the value held within the platform.
Right, and 5 million users, all within 3 years.
Ambitious indeed. The sources also highlight how significant experts see this move.
Yeah, individuals like those at Goldman Sachs are quoted, viewing this as a major step toward what they're calling Securities 2.0.
Securities 2.0, a blend of TradFi and blockchain.
Essentially, yeah. That certainly sounds like a potentially transformative move for the traditional finance world.
It does. Your sources also touch on the broader hype surrounding tokenization, though, right? It's not all smooth sailing.
They do. The analysis suggests that a significant driver of this hype comes from influential figures like Larry Fink, the CEO of BlackRock.
He's been very vocal about democratizing investment.
Exactly. But the source also includes a note of apprehension regarding some aspects.
Such as?
Specifically mentioning the requirements around KYCML, know your customer, and anti-money laundering checks, which can add complexity and friction.
So, excitement tempered by practical realities. Okay. What about VanEck? The sources mention they're targeting a specific blockchain ecosystem.
That's right. VanEck, the well-known asset manager, is launching a fund next month focused exclusively on the Avalanche ecosystem.
Exclusively Avalanche. Interesting. And it'll be managed by their digital asset alpha fund.
Correct.
And what kind of investments will this fund make within Avalanche?
The fund intends to invest in liquidity tokens and venture-backed projects within key sectors active on Avalanche.
Like gaming, finance.
Gaming, finance, and artificial intelligence, yeah. The sources characterize their approach as very long-term. Fundamentals first.
And they're really focused just on Avalanche for now.
Apparently so. The material notes they currently have no plans to explore or invest in other blockchain ecosystems with this specific fund. It indicates a focused bet on Avalanche's tech and business development.
Okay. Shifting focus again, it seems the Middle East is increasingly a key region for crypto. Bitcoin Suisse is making a move in Abu Dhabi.
Yes, Bitcoin Suisse, the Swiss-based crypto financial services provider, founded back in 2013.
Right.
They've secured in-principle approval from the Abu Dhabi Global Market, or ADGM Financial Services Regulatory Authority.
In-principle approval, so a key step.
A key milestone for their expansion, particularly in the Middle East. And it really underscores their commitment to operating under proper regulatory frameworks.
What does this approval allow them to do in the ADGM eventually?
Well, once they receive the full licensing, they'll be able to offer services within the ADGM, which is highlighted as a leading regulated hub for virtual assets in the MENA region.
What kind of services?
Expected to include trading virtual assets, crypto securities, derivatives, and providing custody services.
And Bitcoin Suisse sounds like a substantial player already.
Oh, they are.
Yeah.
The sources provide figures highlighting their scale. They hold over $6 billion in digital asset custody.
$6 billion?
And manage over $2.6 billion in institutional staking services. So, yeah, significant global provider.
And this move into ADGM reinforces that.
Absolutely. The in-principle approval reflects their strong operational and risk management standards, as noted in the source.
Okay. And speaking of the Middle East and prominent names, your sources included news about the Trump Tower in Dubai.
Right, accepting Bitcoin for property purchases.
That's another notable development, isn't it? Demonstrating increasing crypto adoption in high-value transactions.
For sure. The sources report that the $1 billion Trump Tower luxury retail and residential project in Dubai is now accepting Bitcoin for property purchases.
How is that payment process being handled? Is it direct Bitcoin?
It's facilitated through an app called DXPA.
DXPA.
Yeah, which the sources describe as a licensed stablecoin payment provider, regulated out of Lithuania, actually.
Interesting. Was this a major announcement?
Yes, it was announced by Rick Trump, Executive Vice President of the Trump Organization.
And the sources see this as reflecting broader trends in the UAE?
Yeah, reflecting the broader increase in crypto adoption within Dubai and the UAE.
Yeah.
They even note projections that crypto usage in the UAE is expected to increase by over 200% this year alone.
Wow. What are the benefits mentioned for using crypto for these high-value purchases, like real estate?
The sources suggest DXPA enables secure, instant transactions, not just in real estate, but potentially aviation, other sectors too.
Speed and security.
Right. Using stablecoin payments for large purchases can reduce delays, add flexibility, especially for international buyers. And it's noted these transactions are designed to remain compliant with regulations.
And who is the target audience for this particular project?
The Trump Tower project is described as targeting ultra-high net worth individuals and long-term international residents.
So accepting Bitcoin reinforces that luxury, innovative image.
Exactly. It reflects a global trend towards using digital currencies for premium goods and services. The source also adds a geopolitical observation here,
Oh, yeah.
noting that President Donald Trump has been fostering relationships, particularly with the Middle East, and sees this news as positive in that context.
Fascinating intersection. Okay, let's take a slightly closer look now at some specific market segments highlighted in the sources, starting with decentralized finance, or DeFi.
Okay, DeFi. Looking at the numbers presented in the sources, the total value locked currently sits at $16.42 billion.
$16 billion. But that only accounts for about 9% of the total crypto market's 24-hour trading volume.
Right? 9.01% specifically. So value is locked, but trading volume share is relatively small compared to the overall market.
And total value locked TVL itself, that's dipped slightly.
Yeah, TVL has actually seen a slight dip recently, down to $16.70 billion in the last 24 hours.
Okay. Meanwhile, DEX dominates the trading volume on decentralized exchanges.
Is marginally up at 44.67%. So nearly half of DeFi volume is on DX.
And it looks like the DEX rankings themselves have seen some interesting shifts lately based on volume.
They have, yeah, based on 24-hour volume. PancakeSwap is currently leading the pack with $4.71 billion.
Just ahead of Uniswap.
Just slightly ahead. Uniswap's at $4.70 billion. Then there's a drop-off to Orca at $922 million, Radiant at $900 million, and Meteora around $847 million.
And the sources mentioned DAX volumes overall have been pumping.
Yeah, pumping over the last week, showing increased activity in that space.
Okay. What about stablecoins? You mentioned their volume picked up significantly.
Yes, it definitely has. The total stablecoin market cap is substantial, $244.29 billion.
Quarter trillion almost.
Right. And recent volume figures are quite high. Looking at the top stablecoins by 24-hour volume, TUSD is leading by a huge margin.
TUSD, really?
Yeah, $151.95 billion in volume, followed by Circle's USDC at $15.57 billion, and then FDUSD at $5.29 billion. That TUSD number is massive.
Very dominant volume, yeah. But Tether USD/USDT still holds the top spot for market cap dominance.
Absolutely. Tether USD maintains a significant dominance overall, representing 62.41% of the total stablecoin market cap. Still the king there.
Okay, let's compare the two biggest cryptos, Bitcoin and Ethereum. The sources provide metrics showing their current standing.
Right. After Bitcoin's new all-time high, its market cap is listed in the sources at $2.17 trillion.
$2.17 trillion.
But the source adds a caveat, though, saying this figure could change quite drastically soon, suggesting potential volatility or maybe recalculations, something to watch.
Okay, and Ethereum's market cap in comparison?
Stated as significantly lower, $32 billion according to the source data provided.
32 billion versus 2 trillion. That seems like a very large discrepancy. Is that figure potentially misreported in the source or perhaps refers to something specific? Ethereum's market cap is usually much higher.
That's a really good point. That $32 billion figure for Ethereum's market cap does seem unusually low compared to typical market data where it's usually hundreds of billions. It's possible the source data we received had a typo or referred to a specific subset, maybe ETH staked or something else entirely. We should definitely note that discrepancy and encourage listeners to verify current market caps from reliable sources. Thanks for catching that.
No problem, just seemed off. Okay, moving on to trading activity over the last day then.
Bitcoin has definitely seen significantly more activity. Its 24-hour trading volume is $74.89 billion.
Which is more than double Ethereum's.
More than double Ethereum's volume of $31.27 billion. So yeah, pointing to more recent focus on Bitcoin trading.
And looking at overall market dominance.
Bitcoin's is up, sitting at 62.10%. Ethereum's is marginally up at 8.60% again. That 8.6% seems low if the market cap figure was off, but that's the number provided.
Right. Now, a segment that always seems to grab attention, especially when Bitcoin is hitting new highs, meme coins.
Ah, yes, the meme coins. The sources highlight a historical correlation here.
Which is?
Whenever Bitcoin pumps or reaches new all-time highs, the meme coin market often sees very significant pumps as well. Sometimes historically going up by 40%, or even 80%.
Wow. Which are the top meme tokens by market capitalization right now, according to the sources?
Okay, the sources list the top players by market cap as Dogecoin, still number one at $34.30 billion.
Okay.
Shiba Inu at $8.66 billion. Pepe, it's $6.61 billion.
Pepe's had quite a run.
It has. Then President Donald Trump's official token listed at $2.85 billion and Bonk at $1.61 billion.
An interesting mix. And the sources add a crucial caution about the meme coin space, don't they?
Yes, a very important one. They strongly emphasize that the meme coin market is absolutely rife with bump and dump schemes.
So extremely high risk.
Extremely. They explicitly state that none of this information is financial advice, and it's critical, absolutely critical, for you to do your own thorough research before considering any involvement in this area. Buyer beware, basically.
That's a vital reminder for sure. Okay, finally, looking at individual cryptocurrencies, the sources touch briefly on Ripple's XRP.
Right, Ripple XRP, currently trading around $2.38.
And its performance has been a bit mixed recently.
Yeah, up slightly, 1.14% in the last 24 hours, but actually down 6.74% over the past 7 days.
Any reason given in the sources for why XRP hasn't seen the same kind of price pump as Bitcoin recently? It often moves differently.
The sources attribute this lag to what they describe as a minor hiccup.
A hiccup related to?
Related to its ongoing settlement process with the U.S. Securities and Exchange Commission, the SEC.
Ah, the legal case.
Exactly. They characterize this hiccup as being mostly related to documentation and paperwork, suggesting it's an issue they believe will be resolved easily.
Okay. And what's the potential outlook presented in the sources once that's resolved? Any speculation?
There is speculation included, yes. The idea floated is that once the announcement of that resolution is made, the price of Ripple might potentially reach the $3 mark.
Potentially $3, but again,
the sources are quick to add the disclaimer, this is not financial advice, and you must do your own research. Standard crypto caveats apply heavily here.
Understood. Okay, before we wrap up this deep dive, your sources really emphasize the importance of understanding the bigger picture, the macroeconomics.
Yeah, they stress how macro factors significantly impact crypto prices. They introduce the PESTLE framework.
Political, economical, social,
technological, legal, environmental, religious, as a lens for analyzing Bitcoin more broadly. but they really focus in on macro-level factors and critical price drivers right now.
And what specific macro factor do the sources pinpoint as being particularly important for you to watch?
They stress that U.S. inflation data, specifically the Consumer Price Index, or CPI, is one of the two main things you should be watching closely, geopolitically, macro level.
And they strongly advise using the official source.
Absolutely. The Bureau of Labor Statistics website, BLS.gov, they caution against relying solely on mainstream media narratives.
Which can sometimes be misleading or incomplete.
Exactly. Go to the source for the actual numbers.
How does this inflation data typically relate to crypto prices, based on what the sources say?
The relationship described is pretty straightforward. If inflation data comes in lower, showing a decrease, crypto prices tend to pump up.
And conversely.
Conversely, if inflation data shows an increase, it tends to have a negative impact on the price of Bitcoin and other cryptos.
Okay. And this inflation data is also a key factor influencing the Federal Reserve and interest rates.
Precisely. The inflation data, along with labor market conditions and other economic factors, is what the Federal Reserve, particularly Jerome Powell, at the FOMC meeting considers
when deciding whether to keep, reduce, or increase interest rates.
Exactly. The FOMC, the Federal Open Market Committee, sets U.S. monetary policy based on this kind of data.
Do the sources provide any upcoming dates we should mark on our calendars for this data and these decisions?
Yes, they highlight key dates to watch. The next U.S. CPC data release is scheduled for June 11th, 2025.
June 11th, okay.
And the next FOMC meeting and the announcement from Jerome Powell is scheduled for June 18th, 2025.
June 18th, so mid-June is looking potentially volatile.
The sources suggest expecting significant volatility in the Bitcoin space, particularly leading up to and around those dates as the market reacts.
Makes sense. And is there any speculation from the source regarding the impact of a potential interest rate cut?
There is. The sources include speculation that if Jerome Powell decides to reduce interest rates, Bitcoin could potentially reach the $200,000 mark.
200,000, wow.
Presented as a possibility based on their analysis, but again, with the standard disclaimer, not financial advice. They also note that Europe has actually already begun reducing its interest rates.
Right. It really highlights how intertwined the world of crypto is becoming with traditional financial policy and economic indicators. You can't ignore the macro stuff.
You really can't. And the sources are very clear. While there are narratives circulating in the media, the official data releases from places like BLS.gov and direct announcements from the Fed are the most reliable indicators for understanding these macro impacts.
Definitely good advice. So, reflecting on everything we've covered from the sources you shared today, quite a journey. We started with Bitcoin hitting that new all-time high.
And connecting it back to that iconic Pizza Day transaction from 2010. Kind of mind-blowing.
It really is. And then we looked at the significant regulatory and governmental engagement.
Right, from Texas creating a Bitcoin reserve and Hong Kong introducing stablecoin regulation.
To New York City forming a new digital asset crypto council. Lots happening on the policy front.
And then we explored the moves being made by major industry players, Robinhood pushing for that RWA framework.
VanEck launching a focused fund on Avalanche.
Bitcoin Swiss expanding its regulated services into Abu Dhabi.
And even a luxury project like the Trump Tower in Dubai, accepting Bitcoin, highlighting that growing real-world application for high-value transactions.
Plus, we drilled down into the market numbers. DeFi, stablecoins, the dominance metrics.
The dynamics of the meme coin market, which always gets attention.
And the current situation with Ripple XRP and its SEC settlement overhang.
And finally, we connected all of these developments back to the critical impact of macroeconomic factors like inflation data and interest rate decisions.
Emphasizing which official sources and dates the analysis points to for understanding potential market volatility ahead.
Our goal really was to take this whole collection of varied sources and distill them into key takeaways for you.
Giving you a comprehensive shortcut to being well-informed about these fast-moving developments.
We hope this deep dive has achieved that for you today.
It's clear from all these sources, isn't it? The world of crypto isn't just isolated digital speculation anymore. Not by a long shot.
No, it's increasingly interacting with traditional finance, government policy, real-world assets. It's becoming embedded.
Which leaves us with something to consider as you process all this information. A final thought.
So what's that?
Given all these steps being taken towards integrating crypto into regulated systems and traditional markets, state reserves, stablecoin laws, city councils, RWA platforms, institutional funds, real estate payments.
Right, all that integration.
Contrasted with the underlying spirit of decentralization, still evident in areas like DeFi, and the wild unpredictability of meme coins.
Yeah, that tension is definitely there.
So what does this accelerating interplay, this sort of push and pull between the traditional world and the decentralized world, what does it truly mean for the future path of crypto adoption and innovation? Where does that balance eventually settle? Something to think about.